Lee Fundstrat, managing partner. I might as well call you Mr. All In, not Jim, because you've been all in for what seems like forever. Are you still looking at 4,700 on the S&P 500 by the end of this year, Tom Lee?
Yeah, I know September was an ugly month, really tough, down 5%. But in the scheme of a market that could end the year at 4,700, I'd agree with Josh and all the other panelists that that's just a squiggle. As we zoom out, it's going to look like nothing in 12 months. And I know investors are nervous and there's a lot of headwinds here, but as you know, when the wall of worry is big, that's also a good opportunity for investors.
I know, but why did we have such a bad month of September? I mean, it's seasonal, I get it, but it's more than that. And now we're entering what is also a typical tough month, and that's October. I feel like we're just brushing off what just happened in September as if it doesn't even exist.
Yeah, there was definitely a message coming out of markets in September. Because it really puts us at that knife edge of if you're half full or half empty. Are these inflationary pressures we're seeing signs of good demand, or is it stagnation? Is Washington turmoil something that gets resolved, or does it get worse into 2022, in 2024? Are we at peak everything? Is rising rates bad or good? I think there's a lot of questions. But to me, I think, and Jim mentioned this, and Stephanie, the fact that cyclicals outperformed in September, to me, is a really major signal. It says that economic resilience is strong. We're definitely seeing a mix shift in the stock market. And I think people are quite exhausted with COVID. And I think the fact that Merck does have a pill really does alleviate those concerns about vaccination penetration. And it would be a very convenient and, as Dr. Gottlieb says, a game-changing solution. So it's a positive catalyst.
I get you, but rising rates are in their own way a game-changing situation for stocks and multiples and valuations. And if they do start to go up, multiples are going to be depressed. We can't ignore all of the things that you just said are an undeniable positive, but they come perhaps with even higher rates than what we have now, anticipating an even stronger economy in the months, if not years ahead, once we can say, okay, COVID's endemic, but it's not paralyzing to us anymore.
Yeah, that's right. I know the market cares about rate of change. So the fact that rates have gone from 1.1 to 1.5 is concerning because it is a big basis point change. But 2 years ago, if we asked investors, is the S&P going to have multiple compression because interest rates are at 2%, nobody would really have considered that level to even threaten the bull market. 2 years ago, we would have said 4-6% would be the issue. So I think as people look at 1.5% today, or even 1.8 or 1.9 or 2, it's not really a level that burdens companies. It doesn't really burden homeowners. It doesn't really burden people with debt. And I don't think it should burden equity holders.
Now, you've been sticking with your call as well of stay overweight FANG. And those stocks have been tricky lately at best, right? They feel like they're in the midst of a last September, a year ago, weakness, right? Now, the market was okay because all of the other stocks did well. You get my point, right? There was a lot of slack to pick up the weight. And I'm just wondering if that's going to happen again. If those stocks weaken for a more prolonged period, what that's going to mean to the overall story.
Yeah, that's a great question, Scott. Last September, the overcrowding in FANG was significant because they were your stay-at-home play. It did save people's bacons to own FANG for not only 10 years, but throughout the pandemic last year. But in 2021, FANG's not as crowded a trade. So the fundamental question is going to be, are FANG margins at risk because rates rise? Our quant, Adam Gould, did a great analysis, shows that FANG operating margins actually could rise if rates are rising. And FANG's relative performance during inflationary periods is actually quite good. So I think we're fearing something in FANG, but because it's not as crowded, I think they have the capability to rally.
I want to ask you for your market insights, and I know you wanted to ask Tom Lee. Tom, did you stick around? Are you still with me? There he is.
I love him even more.
I can't hear Tom. I hope he can hear us. You want to ask Tom a question?
Well, I just think that if we have big supply chain problems, there's been, and I'm trying to actually nail it down, a huge number of absentees. Like, for instance, in the FedEx conference call at the very beginning, they talk about how Portland's only 65% full, and therefore they have to route everything around Portland, and that's because of COVID. So, Tom Lee, I ask you, if you get rid of absenteeism, does that give J-PAL some breathing room? Because that means that we're not going to have rampant inflation, and maybe even inflation can come down if people go back to work.
Oh, absolutely, Jim. I mean, as you just hit it on the head, when you look at a lot of the supply chain glitches, whether it's companies like FedEx or the buildup at the ports, 80 ships out of Los Angeles and just dozens off New York, it's because of protocols related to COVID. It's the fear for workers, as you're saying, and it's understandable fear about coming back to work, but these are going to contribute to all these glitches. So I absolutely agree. That's why I don't think it's a structural inflation problem, but it is transitory and it's painful, and investors have to really have patience to look through that.
Let me ask you this.
I point blank agree with him.
When you hear Jim Lebenthal, Farmer Jim,
right,
who I've now come to call Mr. All In, because
right,
he is literally all in. He has no cash on the sidelines.
No cash. I have 7% for the trust.
He thinks the bulk of the volatility or the caution in the market is due to the D.C. drama. Dysfunction is probably a better way of characterizing that. You think so?
We got Costins is telling us you got to buy that. You got to plow through it. Yeah, you got to plow through it.